Welcome to the Investor Impact Power Talks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
All right. I want you to meet Sada. Sada Yelro is a great friend of mine. He took early retirement from IT industry. His company got bought out by Broadcom, right? Sada, and its stock is $1,200. So Sada made millions of dollars. I don't want to say how many millions.
That I don't know any. So.
But it's exciting that and I've done partnerships, David, before, and we are meeting every week in Mastermind also, just he and I. He lives only 15 minutes away from me, and not even 15, Sada. We meet at Starbucks and just coming back into lots of great things. Catherine is from Florida, right there, David, near Miami, West Palm, right, Catherine? Yeah, West Palm. Yeah, glad to have you. That's great. Braden is there. Brother Braden was sharing how he's put some LOIs and all. Let's see how many people will show up today. It should be fun. I know there is one person definitely from Alchemist Nation. Miguel, I think, is his name, right? Miguel. So he said that also, Vinny, I would like to join. I know, of course, brother Steve should be here. Danny should be here. Ankur, I think he takes his son. Oh, Ankur, right there. He just texted me. Hey, Vinny, sorry for the late response. My boss is in town and I have all day meetings that couldn't move. No worries. No worries. We are recording it anyway. So we'll just send it to everybody. We'll post it there on our side. Wife caught COVID, been hectic week. No problem. That's great. All right. So let's get started. I think, again, I do want to show the one thing which we always have to do it. Our attorneys ask us to do it. And that is to do the PowerPoint with the, oh no, not this one, Vinny. What's going on? Okay. Sorry about that. There it is. Okay, I'm going to share the screen right now. And we'll go over that. Okay, let's just close this up. Okay, I'm there. And I'll just come back here to share the screen. Alrighty. Okay. Alrighty. Welcome, everybody, joining the mastermind of Vinney Chopra and brother David Malvani, right there from Jacksonville, Florida. I know David has been busy with the flip. Actually, he's doing great one, and I'm so glad Dave could join. Welcome to our Inner Circle Mastermind. Hope you're really excited. You are ready to crush it together with us. And we got some really exciting things today. We're going to talk about, again, remember, this is Inner Circle mentoring session that we do every Wednesday. When I'm traveling, Brother David is able to fill in, or we miss 1 or 2 weeks. Usually, Brother David is there, and where we talk about topics of interest in real estate, multifamily, commercial, hotels, senior living, storage units, investing in syndications, car washes, storage units, marinas, golf courses. I should write all that, Dave, there, because we have done training on so many things. And today, Brother Stephen is going to talk about vending machines. Oh my gosh, there is fortune to be made in vending machines. And that's what we're going to talk about today also, along with other case studies. This webinar is for entertainment and educational purposes only. It should not be considered as legal, accounting, or investment advice. This webinar does not represent an offer to sell or solicitation of an offer to purchase or an investment or security, not at all. And then the information presented believed to be accurate and reliable. We use online media and reports and all that, but we make no representation or warranties expressed or implied as to the accuracy of such information. We expressly disclaim any or all liability that may be based on such information or errors or omissions thereof. Please consult with your own attorney, financial advisor, and CPA for legal matters, investments, and specific tax situations. I wanted to read the whole thing because My attorney said, Vinney, since your students come every week, you don't have to read it. You could just show this slide and they can read it. But since this is January 24th, New Year 2024, I thought it'd be good to do that. Oh, I'm so glad Philip is in, Brother Mike is in. It's going to be a wonderful session today. Again, keep positive thinking, confidence, happiness, enthusiasm, inspiration, belief, motivation, all those things come. We build our energy because we are more positive thinking people. We accomplish a lot more if we stay positive. And abundance mindset. That's the other thing I like to talk about every single time, every Wednesday. Failure is an opportunity to grow. Never lie down on the floor, get up, and then we'll be able to accomplish better next time. We learn from mistakes, but we can do. An abundance mindset is so important. Acknowledging that the good that we bring already have in our life is the foundation for more abundance. The more abundance manifestation we think and goal set and dream, more we will be able to accomplish. So welcome everybody. All right, all right. Let's talk about the wins. And we're going to go right into it. I was able to come into a very big mastermind. I don't know how much they charge. They invited me, I think last week I mentioned it to you, right? Brian Del Maso, I think Metrics. And actually, I might be doing some partnerships with Brian now. It's mind boggling. And they meet every week in a mastermind. I think they pay, I don't know, 6,000 a month. I think in that mastermind, I was invited and they want to let me come there even for free and even talk more and excite people up about the money raising and other stuff like that. So anyway, but who would like to talk about their wins? Let's talk about it. Brother Mike Fritz is here. Brother Mike, tell me what's happening, brother. Yay.
What's happening, my friend? How are you doing?
Oh,
it's
Vinny's
good.
always excited. I don't know. This is my 72. I'll be 72 in August. I'm just getting ready to get
Just-
more energy this year.
I love it. I love it. I love it. Yeah. Good wins, man. Getting our second manufacturing company off the ground. We got a couple multi deals. We're going under contract on a 96 unit and a 46 unit in Lexington this week. And so we're actually doing a good. So the 96 unit, 70% occupied. It's right across from 166 unit we own, and we're at 98% occupancy. And it's a nice building. It's just bad,
I
terrible
love
management.
it.
But because I told him, I said I'm just not willing to step into the bridge market right now. I said I need you to care. I need you to carry the debt for 18 months till I get it stabilized and I can take it to agency. And he did.
Oh my gosh, that's amazing. What interest rate? Or
So here's what I did with him. I said, here's what I'll do. So he has so I'm buying it for $6 million. He has $2.5 million on a 3.95% interest rate. I said, I'm gonna take that over while we're in the deal, and I'll pay you 6% interest only on the difference. And so
love it.
Overall, that's probably a 4.9% rate on the entire loan amount.
Yeah, on the whole thing.
Maybe five.
In this market, to be able to control that kind of asset with that kind of interest rate, that's a win, brother. Big win.
Yeah, so that was a win. And so now we're just underwriting the numbers when we go to agency. Will we have to bring more cash, or do we think we can lift the property enough to refinance without having to bring in more cash to the table? And so we're under the underwriting stuff right there. But we got vertically integrated this year with our own management. And so we can cut expenses. And so we're able to come at properties a little different. But yeah, so exciting stuff, my friend.
Mike, can I say, I want to give you accolades. 2020, COVID, your business goes down. And in 3 years, you are able to accomplish so much.
That's because of you, brother.
No, not me at all. The kind of person you are, I knew when you joined the academy, I knew you're going to move and shake. I knew that you were so determined to make things happen. And you raised money before you even look for the deal.
I did. Yeah, that ended up being a really good strategy, but I'll be transparent. I created that strategy because I was scared to death of not being able to raise the money and getting caught and not being able to close the deal. That's actually why I did that more out of fear than I did that out of skill. And I'll scale that back a little bit because it sounds like, oh yeah, he had this strategy. No, I just didn't want to get to the closing line and be like, I don't have the money.
Yeah.
But that ended
Okay.
up being a good strategy because I was able to build relationships with investors faster because I was able to basically, they always say in marketing, the worst thing to do is create a product, then go find somebody to buy it. You want to find the people
Yes.
that want it already and then create what they want. And that was my mentality.
You did it right, brother.
And so
And
but I
you
appreciate you.
and no, that's exciting. The good part also, pivotal, talking to everybody here, is that brother Mike, now he's buying multifamilies, right? We just heard. But last year he bought manufacturing facility. He said, Vinny, they are cash flowing better than my multifamily.
Way
Vinny
better.
didn't buy anything last year, brother, because everybody was on high horses. Everybody, interest rates hikes and all that. So manufacturing properties are giving you great cash flow. You're closing on second one, third one. Huh?
Close on second one, working on the third. We have an offer in on the third. We're rewriting the LOI a little bit. But yeah, the thing I like about the manufacturing space is any place where there's low, and it's a kind of a catch-22, but any place where there's low labor, usually there's high demand for the product that they create. You look at it.
Sure.
There's low labor, it
Mhm.
tends to be high. If they've either burnt through the workforce and they need more, that means there's product to be made. So if you can fix the employee issue, you have a built-in supply. So one of the ways to know where money's flowing is look where labor is short. And that's what I did. And so I found
Smart.
labor was short. Same way in construction. Like there ain't a construction working in the world right now that's slow. They're hard to find
Mhm.
labor. So I just looked at where the labor was short, and that meant that there was product to be done or services to be done. And that was true
Love it.
in the manufacturing space.
Wow.
So then I just
And it's
partnered with
in the state of Ohio?
Lexington, Kentucky,
L- l-
Cincinnati, Ohio. I just bought my second one, and then the other one's up in Indiana, but it's in that Midwest. And that goal is
Yeah,
to do a
right there.
we'll buy 4 or 5, 6 of them, and then do a roll up. Implement like a system in each one, get a manager in each one, and then sell it
Yes.
to a conglomerate of some sort.
It's fabulous. This is so exciting. The one thing I love what you just said is you fly into one place and then you can take care of so much business in 3, 4, 5 days rather than having one deal here, one deal here, one deal here, one deal here.
So
You're
true.
all over the place. Isn't
So
that
true.
true? Yeah.
It is true.
Yeah.
But I just, Vinny, I was thinking about you. I would need to connect with you to get on your calendar. I'm just launching a new podcast called The Passive Investing Show, and I need to have you on it to talk about it, to talk about
Hey,
stuff.
I'm ready. I go for Patagonia, 21 days trip.
Oh, do
right?
you? Oh, that's a beautiful
Yeah, next
area.
Friday. I leave
Patagonia
next
is beautiful.
Friday. Patagonia is going to be beautiful. My wife and I and brother sister from Atlanta. So we are
Love it.
all going there 21 days. And why do we make money? We got to just
Gotta enjoy it.
Like brother Steven says, take more vacations. TMV. I'm following his footsteps. So what? No, please schedule me.
Yeah, I will.
Any week, any day, just text me. I'll come on it. We can record
Love
it. My Desi Money Show is also getting launched. Another podcast. This is to go after the entrepreneurs of Desi. Desi in Indian language means Indian and Pakistani from my descent. So we are going after 4 million entrepreneurs or something. No, not 4 million. I think 4 million is population. So there will be maybe 1 million entrepreneurs who have made really good money. And through this podcast, we'll be interviewing people and all that and asking them to invest with us, invest into our fund, which is I've launched already. That's great. Thank you for sharing and congratulations. Congratulations. All right, wins. Come on, Philip. What's your win, brother? Tell us. Let's talk about what's going on. And brother Daryl is coming in. There we go.
Take it 3.
Yay. Good to see you, Daryl. Yeah.
Good to see you.
I haven't had much wins in the real estate space recently.
I know. That's why I didn't see you in the class for a good time, brother. Tell me, what's going on? Huh?
I haven't been able to find anything to purchase, so there is that.
Sure.
And then we're more or less stabilized on the 16 unit we bought 2 years ago. We're just trying to sell it, but there's no buyers for the price point that we're looking for. And
Okay. Is this one in Portland then? Or where
it's
is
in
this?
Eugene. It's
Eugene, Oregon. I've been there, brother. Yeah,
Yeah,
I know
yeah,
exactly where that is. Yeah.
yeah.
Oh,
So
okay.
yeah, right now we're
No
just
worries.
holding it. Our loan is due in, well, our loan has a 5-year extension after 2026, but it'll be readjusting its interest rate in 2026.
Okay.
So I think the
Okay.
timing
What's
is
the
going to be
interest
okay.
rate now? What's the interest rate now?
I think
Uh,
it's 3.25.
Hold on. Hey, that's no problem. No
Yeah,
problem. You should just keep it. But then
yeah.
can you increase the rent? I think everything is going skyrocketing over there. Oregon and Seattle area, Washington. Huh?
Yeah, so we have increased the rents. We bumped it from 800 to 1200. Um,
Okay. Hey, oh
yeah,
my gosh, that's a big win.
yeah,
50%. Yeah.
yeah, but things are slowing down now. I think it's just the winter, but we'll see how it goes.
No worries. No
Overall,
worries.
we
Okay.
were wanting to sell it, but then just because the market buyers are here and sellers are here, and you
They
know,
are, they are. I
yeah,
know the sellers have not come down. Their
no,
expectations, right, Dave? Their expectations haven't come down, brother. Yeah.
no. At
Not
least not
much.
in
Yeah.
Go ahead,
No, go
Phil.
not
ahead.
at least not in the markets that I'm in, right? Oregon is
Sure.
not a very wasn't a very hot market for anyone. And then I'm currently in Virginia, which is DC, and the Richmond markets are not very hot markets either, but they're also very stable markets
Uh-huh.
price-wise, but they're also priced at where primary markets are priced at.
Got it. Got it. Dave? Yeah, brother.
I would just say this. If you look at what Mike's doing, so I went off and I joined Carl Allen's business buying mastermind. Why? Because in businesses, you're getting a cap. If you were to use cap rates, you're getting a cap rate in the 30s. It's just like you buying businesses that cash flow. But here's the reality with the real estate world. I'm negotiating a 28 unit deal right now in Texas. It's an A property and it's basically it's $10,000 and I take over.
Wow. Wow.
That's creative financing and it'll only make me a couple grand a month, but it'll make a couple grand a month. There are deals, but you got to be willing to look for the deals. So to say there aren't deals in every market, about according to IRR, like 58% of the country's in hyper supply right now. That's where the deals start. I mean, if they're in hyper supply, and Vinny, I don't know the number, but I think it's $2 trillion is bridge loans that are going to come due in 2024 and 2025.
Yes.
That's where the deals are. Because if I got a bridge loan coming due and I've put my signature on the bottom of that, on that personal guarantee, what am I going to do? I'm facing a situation where we got to get out of this property. And if we put 30% down, guess what's probably, we're not going to walk out of this closing with probably that 30%. We might walk out with 10%.
Yeah.
So how do you get to the seller? How do you get the seller's expectations? I think it's,
Yeah.
you gotta talk to them. Like Mike, what you did, you said, look, I'll take over your debt for 18 months. I'll take over this property for 18 months. But if I'm not going to make money, I'm not giving you the money you want. And so that's negotiating. That's just negotiating 101. And Mike, I love that you said that. Was that 74 units or 78?
Huh?
The seller financing deal?
Yep.
That was 96 units.
96.
96.
That's phenomenal. And so those deals are there. He took over payments.
Yeah.
It's easier to convince an owner with 96 units. I say convince. He or she is convinced already. If they got a bad deal, they're convinced already. You don't have to convince them. You come to them with numbers that make sense for both of you because they realize it's got to make sense for you. That's where being creative in this market comes in. None of us walk in the room and have Vinny's reputation. Boy, if we did. But the flip side of that is you walk in the room and you listen to what the seller is saying. And in many cases, the seller will lay out the entire roadmap of how they want to exit. And
So true.
if you understand their roadmap and you insert yourself in there to say, hey, okay, here's my roadmap. I can't get into this deal if I can't make money. And so how do you propose I make money on this deal? You're trying to sell at a 5 cap. Okay. I'm borrowing money at 7. let's say at 7%. Maybe the end of this month, they'll drop it to 6%. But I can't make money at 7% interest. How do you propose I make money? You've got 35% equity. You might have an assumable at 3.5%, but it's that equity piece is the problem right now. So how do you propose? And let them come up with make the deal work. I see positives. I think of Encore, he's not on the call, but
Yeah.
Encore probably analyzed. I've never seen anybody analyze more deals in a single year.
True.
And again,
So true.
he's just crazy, man. But out of all the deals he did, he was analyzing them in 2021. I'm sorry, 2022, which is a
Yeah.
year because the cap rates were so compressed. Everybody's making money. But 2021 and 2022 were probably the highest. Wouldn't you say the highest price, lowest cap? Many, you didn't buy a deal in 2020, right?
2023, 0, 2021, 1, no, 2022, 1, 2020, okay, 23, 0, 22, 1, 21, 1. 4 years, only 2 deals. And then before that, 0, then 2. I mean,
And how
I've
many
been
this year?
selling.
It's crazy this year. You're probably looking at deals regularly though. But you were selling deals, right, Vinny?
Yeah, I was selling. I sold so many deals at the peak. I'm selling Knoxville, which I bought in 21. I'm selling now in 24. It should have closed in December 2023 within 2.5 years, but it'll close hopefully next month. So that is, no, you're right. The key thing also is that we got to be in the game to play the ball, to play the game. You got to be in the game. You cannot be spectator is the word. But let's talk about some other wins. Let's just say Miguel. Hey, brother, Miguel, right there. Miguel met me at the Millionaires Summit. I've been really impressed, and he bought the course and everything, not through school, but my other platform. Miguel, can we see you? He's a young man, just 22 years of age. Is that right, Miguel? I don't know.
No,
Is your camera working?
turned 20 in January 14th.
Okay, January 14th, 21. Are you 21?
No, 20. I was 19.
20, 20, brother. Okay, sorry, I gave you 1 year more. Okay, 20. Tell me what your experience and what you are doing right now after you got into this whole business of multifamily. You've been doing single family wholesaling for like how many years? Tell us a little bit about you.
I never did wholesaling. I was in property management. That's my cup of tea. And now, ever since I met you, Vinny, at the Millionaire Summit, I've been underwriting bigger multifamily deals, such as 30, 60, 70 units. I was scared into jumping into the bigger deals because I was so used to being in the small multifamily space. And Vinny just changed something in my brain and told me to stop being scared and jump into it.
Yes.
So now I'm underwriting.
I love it. I love it. I love it. You said you put some LOIs. Did they come through,
No,
or I still?
all of them fell through. One I was gonna get, but the seller didn't come into term with me. I got him. He wanted 3.9. I got him down to 3.6, but the deal had to work at 3.4. So he didn't want to accept it.
Couple of 100,000. If it's not sold, keep at it because
I'm gonna follow up.
Follow up. Yeah, brother. Yeah. By the way, brother Miguel lives in Orlando. Oh no, Tampa, right?
Massachusetts.
Oh, hold on. See, my mind is it's very close, right? Tampa.
No, Massachusetts is way up on. Hey, Miguel, never be afraid to ask a seller if you're on a $3.6 million deal, you're $200,000 apart. Say, okay, I'll give you the $200,000. How about you just hold a note for 24 months and I'll pay you $225,000 in 24 months on the property. Just ask. It never hurts to ask. Hey, if we're 200,000 apart, okay, I'll come to the table, but I'm not going to give it to you today. Let's put it on 2 years from now with a due on sale, but I'll pay you $225 in 2 years.
I love it. Creatively.
It's free money and it's fake money. If you're going to raise the rents, it's going to cover that. It's not, I don't want to say it's fake money, but it's when you're borrowing money, it's fake money. You're creating out of debt. And
That's so true. So true. Equity through the valuation of the property with your business plan, Miguel, right, brother? You're going to be able to decrease expenses. You'll be able to increase the rent. Hopefully, you're buying this property because market rents are higher than the current rents. And then there are some RUB system, ratio utilities bill back system, where you are going to charge the residents if they are paying only 30% of the utilities, and the owner is paying 100%, of course, to the water, gas, electric, and termite and all that stuff. But you come back here, you increase that RUB to a higher level, to maybe 85%. You get other incomes to add into the deal. That every single thing is going to increase NOI, net operating income. And with the cap rate, that increases the value of the property, that increases your equity. If your loan is constant and the value of the property increases, guess what? Equity increases, brother. So that 200, what Dave is saying is so right. It's so minuscule, actually, in my thinking. Don't let the deal go. I would like to, yeah, go ahead, brother. Mike?
Yeah, I was going to say the other thing, what Dave said is 100% right. The other thing I've done is I've offered a lower cash value or give them equity in the property. And here's why I offer equity, because I'll show them my underwriting. Here's where we're going to take the property. Here's what your equity is going to be worth. But here's the ninja trick of why you do that. For them to not take it, they have to unsell you on the value of the property. They're trying to sell you the property. They don't want to do that. They don't want to tell you why the property won't be worth that, because they're essentially telling you why not to buy it. So if you give them an equity play, they a lot of times will. We have one that right now that we're doing that. He's holding on for 5% so we can keep his debt and giving him upside. So a lot of times they will take that to offset that. Because if it's a good deal at 3.6 million, 200,000 shouldn't take the deal off the table, depending on your strategy. But unless it's a fix and flip short period, that might change it. But it's a 4-year hold. You probably will be able to swim past that.
that's brilliant.
Very brilliant. Very brilliant. Braden, brother. Oh, thank you. Thank you, Miguel. And thank you, Mike. Thank you, David, for adding. Huh? Go ahead. Go ahead. Oh, what did you say? I was going to say, Brother Braden, you want to share? I know you were sharing in the other earlier session your wins. You want to share? Yeah, there you are, brother.
Yeah, appreciate the insights on this, Paul. It's really beneficial for what I have going on now. So I submitted an LOI and an offer to a seller with a seller finance. He essentially said I want $1.5 million, and my offer was $1 million based on what I think the property can do and what it's worth. And so I love what David just said about, because it's funny. He looked at my offer and I had with interest, him holding a note for 10 years was 1.2, right? Or 1.25. And he goes, we're 250,000 off, man. And I'm like, dude, you got to show me some numbers to show me why this property is worth 1.5. And he says he has an offer from another buyer for 1.5. I don't know that he really does. And I said, look, man, I can offer you $2 million, but it doesn't mean it's a real offer, right? This is a real offer in your hand. You're
I love it. Sure. And that's like
tack on that extra fee.
Totally. It's, hey, you want to stay for 6 months, 3 months, and the buyer walk out at the end, or you want somebody who is really sincere and is going to close on the deal, right? All those kind of buyers are there, but you are genuine, Braden, so you can impress upon, maybe, let's see if he'll turn around. But good negotiation is the key to any success. Win, win, win. It has to be win. Huh?
I want to add to that. So let's look at what you just said there, Braden. I could pay you $2 million for your property. Okay, you said that. If you say to the seller, I can pay you $2 million for this property if you'll give me 0% interest.
Well, that's what I was going to do. That's what I was going to do on the 1.5. So I haven't come back to him yet and said, look, I'll give you your price. I did text him after. I said, look, I can pay your price, but it's got to be my term. But yeah, if he'll carry it 0%.
You can't have both. You can't have price and terms. Yeah. And that's what you say. I could pay you $2 million if the interest was 0 and the payment was principal only at $3,000 a month. You throw something impossible out there, but but what you're doing is you say, you're wanting a price. I need cash flow. Vinny's in the business of cash flow. We're all in the business of cash flow. So how
That's
can
right.
you let me cash flow on this property? If I give you your 1.5, how can I create cash flow? If I give you 6% interest, I can't make a 6% interest payment. So will you let me pay 3% interest only, like Mike was talking about? What he did is he's making interest only and defer the interest on the back end.
Yeah.
Nothing in real estate is cast in stone. And I said fake money. It's really a wrong way to say it. It's not fake money. It's real money, because money is created. When you create debt, you create money, because there's almost always equity with the debt. And it's all the payment structure. Like what Vinny said earlier, it all boils down to the NOI. And when you stress to the seller, give me the NOI I need so I can sell it to my investors, and I'll take this deal at the price you want. We just have to either defer interest, or I'll pay you a higher price and I'm going to make very low interest payments to you so that I can get the cash flow for 3 or 4 years, do the things that I'm going to do so that I can exit the property. You get your money, I get my money, everybody wins.
Yeah, love that.
Awesome.
I just tried to anchor him at a higher price because he said he had an offer at 1.5, and I said, I can offer you $2 million. It doesn't mean it's a real offer, though. I said, here's an offer in your hand, dude. And it's like, where's this guy that's supposedly offering you $1.5 million, man? How long are you gonna wait? How long are you gonna wait for him to come around? So
one of the things I've done when people do that is I'm just like, you know what? If I was you, I'd take that deal. Don't call him back for 2 weeks. You'll find out real quick if he's got a $1.5 million offer. And I'm serious. I do that all the time. I'm like, okay, you know what? If I was in your case, I'd take it. I wish you the best. I'd walk away. And all of a sudden that deal pops back up. Oh, the deal fell through. Oh, did it? Yeah. And so, yeah, because
you call their bluff. You call their bluff, right?
Mike,
take your deal. Go for it. Because also it also
head.
puts out the energy. Listen, I don't need your deal, but if this is a good fit, let's get a deal done. And I've learned more about just walking away. Say, okay, go to town. I'll go to the next one. And
I love that. I love what we are talking here. Be straight, be bold, if it's going to make sense, it will make sense, right? But we cannot be timid in putting LOI and all. Just be bold and let's see. If it's not going to be, it's not going to be, right? Yeah.
100%.
No, that's fantastic. Go ahead, please, Steve.
Mike, you're all over it. You never know if you have a good deal unless you say, you know what, this isn't going to work. I got to go. And they go, whoa. So Mike's all over it. This have another buyer. Seems like I hear that every week that we're here. I have another buyer. And Mike and Dave have really nailed it down. I think that's a 1-2 combination. I think it's the jab that stuns them. Man, I take that deal. I'll just go for it, man. I'll talk to you later. I won't even say that. Just bye. And then 2 weeks later, oh, it fell through. You know what? I've been thinking. I've got this creative financing. You want this. I want the term. What do you think about this? And now you're coming from a place of strength because they know you've already walked away once.
Yeah.
And they know you'll walk away again. So this is really, out of everything that we've talked about in the last year and a half, I think today is the strategy of how to negotiate these deals. Because we hear it all the time. I have another buyer. And last year before that, yeah, sure, the prices were overflated and they were closing before you could even put them on the market. But those days are coming to a quick end, if not already done. And this hyper stuff that Dave keeps talking about, see, the negotiation is what excites me. When we bought our new Traverse, it was a walkaway. Always a walkaway when you buy a new car. You always walk away. Like,
hold on. I heard when you want to buy the car, go at the end of the month. You get better deals because they want to hit the quota, the budget.
And December is the best because they're all trying.
Oh, December.
Yeah, December is the best. You go to the end of the month of December, they will give you everything because they're trying to. The owner's got double holdback, and they're wanting to hit their numbers, so they'll give everything away. But you got to, like, I came down $8,000 and 2 more points off of whatever interest they were wanting to do. Because it's like, awesome. This doesn't make sense to me. I don't think we can do this, honey. We knew the good cop, bad cop, right? She's, but I really want it. I'm like, yeah, but let me see what I can do. You're not doing anything. I already know. So This is real. This is really good. This is
I
just
love
walk
it.
away.
Love it.
Take that
Yeah.
deal is brilliant, and then come back with creative financing.
Excellent. Excellent. No, thank you. I would love to also ask Catherine. Catherine is from West Palm, Florida. We got David Mulvaney right here, the king over there, Jacksonville side right there.
That's all for this episode of the Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.